guess is it's going to at least be 100. It's quite probable, possibly could be 200. That's a new reality. No, that doesn't mean you're going to stay up there. You can have a sell-off, but you're not coming back to 50. Your sell-off might be from 200 to 125 or something. You're in a new reality on silver then. The key is participating in the move into that new reality. Take those two arrows, the green arrow showing the logarithmic dimension of that move, 2011, and the red arrow to the 1980 peak, and move them over to the present. At the present price, if you go vertical, and I'll give you that argument in a minute, equaling the 1980 surge, 79.80 surge, you go up to 200 bucks or so, okay, logarithmically. And if you match the move from October 2010 to April 2011, where silver went from like 20 something to 50, silver's going over 100 to match that ratio scale over in the next handful of months. Okay. Now, what's going to cause this? Well, aside from the certain fundamental.
Today, we're unpacking a potential game changer in the precious metals market. Financial expert Micheal Oliver from Momentum Structural Analysis is sounding the alarm. Silver could be on the verge of a vertical surge, potentially hitting $100 or even $200 in the coming months. With gold already at $4,000 an ounce and economic uncertainty gripping everyone right now, this could be your last chance to jump in before prices skyrocket. This might be the opportunity you've been waiting for. Hit that subscribe button and turn on notifications to stay ahead of the curve. Let's dive in. First, let's get to the heart of it. Micheal Oliver argues we're at the gate of going vertical with silver, based on historical price patterns. Looking at a logarithmic scale chart, he compares today's market to the 1980 surge, when silver jumped from $8 to $50 in 6 months, and the 2010 to 2011 rally, where it climbed from $22 to $50. Applying those moves to current levels, Oliver sees silver potentially hitting $100 or more if the breakout triggers. That's not hype, it's technical analysis backed by decades of data. Context from the present economic climate adds urgency to his bullish thesis. With golds at $4,000, driven by inflation around 3–4%, geopolitical tensions, and central bank buying. Silver, often lagging, is now catching up, with Oliver noting it's suppressed compared to its 1980 high when adjusted for dollar devaluation. Also, with the U.S. national debt exceeding $35 trillion, the dollar's stability is under scrutiny. We could be at the cusp of a seismic shift from intangible assets like treasuries and fiat currencies to hard assets like gold and silver. Now, we will show you clips of the latest interview, but before we do, please like, share, and subscribe to get more up-to-date financial commentary and stay ahead of the curve. Thank you.
Explain what the top chart is.
Yeah, please do.
That's simply every month, where is the price of silver? Divide an ounce of silver into an ounce of gold and express it as a percent. Okay. We go back to late 2019 and you see the surge into 2020 where silver beat gold on the upside. The black line went from like under 0.9% up to 1.5 something percent. So a big percent move. That's like silver went from 15 to 30 during that time, and gold went up about $600, but silver doubled. Okay. So the spread outperformed, silver outperformed gold. But since that high in actually early 2021, silver has been giving back relative value to gold. Okay. It actually dropped back under the 1% level early this year. And has since, you could see, shot up nicely now on the spread chart. Now, right now, the spread chart's above that downtrend, but we prefer that horizontal red line. This is the top chart again. Top chart right here. This is the spread itself, which is price versus price expressed as a percent. I want to break out over that red horizontal. That means getting the price of silver versus gold from where it is right now, which is 1.23% approximately, above 1.31%. Then that spread has a triple top breakout over a base that goes back about 2.5, 3 years.
Yep,
so it's technically important. Okay. Now, when we run momentum of the spread, which is the chart below. Let's measure, what it measures is each of those monthly spread closes in relationship to a 10-month moving average. It has the same triple top, except you're at it.
We were right there.
Yeah, momentum is over to the right, is that third hit on the
2,
red line.
3.
So momentum is at its triple top breakout, which usually occurs first. Momentum almost always will break out into a new trend direction prior to price. Okay. We closed right at it the end of yesterday, the end of the month. Okay. Now, it doesn't take much to break that momentum through, and it doesn't take much to actually break the spread chart through. What does it matter? Go to the next page. I'll give you an example. To go back to the 2008 through 2011 advance in silver price versus gold, the spread was down in the 1.2% level back in 2008-9, and it went up and made a plateau for about a year and a half, 2 years. It had a flat ceiling, the red line. You went up and bumped it. Okay. It's when you closed above it, the green arrow, that was in October of 2010. Okay. Make that note. Now drop down to the two charts below. These are simply price charts of silver and gold, monthly bar charts. I circled the month on price of silver and the price of gold when that spread broke out. That was October 2010. Silver was about $22, and in 6 months it was 50.
Look at that.
Okay. Gold also advanced, but it didn't have anywhere near the percent gain in that period of time that silver did. So the key to telling when silver is going to accelerate versus gold, and also when silver price is going to go vertical, this occurred in 79, 80, 2010 and 11. We're looking at the 2010-11 situation here, is when the spread breaks out. So
it's right now.
We're looking at the spread chart now as the next trigger to generate not just upside in silver versus gold and upside in both of them, but silver going vertical versus gold. And possibly, probably doing what it did in 79 or doing what it did in 2010-11 in terms of percent gain. So the key trigger right now to look at is not the price charts, not whether silver goes through $50. It's a relic, the spread chart. And we're pushing up toward it as we showed on the prior page. So anyway, this is what we're pounding the table over right now. Watch the spread. It's the most important technical out there. And if you think silver and gold have been going, quote, vertical lately by looking at your arithmetic daily chart of the last year or something, you're wrong. You haven't even begun to see it yet. And I think it's about to happen because, again, momentum is back to that triple top. It ain't going to stop. And when it goes through, the spread will go through as well, in which case, set the clock. The next couple of quarters could be meteoric, and silver may end up it will likely end up in a new price reality rather than this $20 to $50 range it's been in for 50 years. Okay.
Right.
Copper's above that range. Gold is well above that range. Silver's about to catch up. Anyway.
So
what's the trigger? Oliver points to the gold-silver spread, the ratio of silver's price to gold's, expressed as a percentage. Right now, it's around 1.23%, but he's watching for a breakout above 1.31%, a triple top level unseen since 2020. When this happened in October 2010, silver soared from $22 to $50 in 6 months. Momentum, measured against a 10-month moving average, is already at its own triple top breakout point as of late September 2025, a signal that often precedes price explosions. Oliver sees this as a setup for a silver supply squeeze. If the spread breaks out, silver could outpace gold significantly. Think 200% gains versus gold's 50% in a similar 2010 to 2011 stretch. With AI cutting jobs and middle-class wealth eroding, this could be the catalyst to drive retail FOMO-based participation. Oliver warns the $50 level is nonsense, in real terms, given inflation since 1980. A $200 target aligns with adjusted historical highs. In today's economy, with stock markets at peaks, but showing cracks, central banks dumping U.S. treasuries for hard assets, and a rapid degradation in the money unit, $200 silver is not just speculative but a reality. Let's get into the remaining clips of the interview.
Again, but it'll come down from a new reality. In other words, in both of those moves, if we further examine them, I don't have the charts here, but if you go back to that 79 to 80 surge at the tail end of that bull market that had been underway since 76 low. Okay. In the last 6 months of that move, there was actually a correction in the middle of that move. And
I
no
can bring
doubt,
it up again if you want me to.
if you can, you won't be able to see that on the log scale, I don't think.
Okay.
Well, yeah, you could see it in 2008. There's an example there. You'll notice about 3 months after the green circle, where silver surged from just above 20, it surged up to over 30. Okay. You had a bad month. No, the middle chart,
Middle chart right
the
here.
price chart. The middle one, silver, is the middle chart. That one there. 3 months later, you surged. Then you had a bad month in January of 2011, where you had a straight down month. 3 months after that spread breakout, you had a surge in price, but you had a bad month
Right
in
here.
January.
Yeah.
No doubt everybody thought, oh, that's it. It's a blow off and you're through. Then you turned, and the next 3 months, you went berserk. Okay.
Yeah, that brings
Same
up a good
thing
point.
happened in 79 to 80. There was a pause in the middle of the move, spanning about 5 to 6 weeks, where it looked like, oh, golly, it's topping. It was just taking a breath. And then it tacked on the rest. So it was the 3 months, wobble around, confuse, then get there. When you get to the new reality in silver, and it could be, my guess is it's going to at least be 100. It's quite probable, possibly could be 200. That's a new reality. No, that doesn't mean you're going to stay up there. You can have a sell-off, but you're not coming back to 50. Your sell-off might be from 200 to 125 or something. You're in a new reality on silver then. The key is participating in the move into that new reality. And I think it's not going to be one of these things where you get to casually judge it along the way, if you know what I mean. If you're
Right.
not there, you're not there. Okay.
Right. So in your opinion that's the move you want to get there for that move, and then you
Yeah,
can
after that,
reassess.
who cares? I mean, you've done
Right.
it, especially if you're using anything with any potency of leverage, with futures or call options, especially. Uh, Again, the key is that spread. And that's our primary technical focus week by week in our reports. In fact, we're going to put out an update this afternoon on that. And I break it down into a weekly situation as opposed to monthly closes, because we're pressing at the levels that are key. And if you can get through them, it begins.
Kitty bar the door.
Yeah, and you don't need a headline. The reasons are built into the market. There's decades of underpricing of silver relative to gold, decades of underpricing silver relative to anything, the value of the dollar, not versus other currencies, but its real buying power, et cetera, et cetera. It made a mistake. Investors did. They let it get underpriced for too long, and they thought, oh, that's the new reality. No.
Yeah.
It's just like, we see it with market tops sometimes. Like, you make a bubble top in a stock market and you think it's just going to go up forever. And it gets overpriced way too long. And when it corrects, it just doesn't correct. It collapses. It
Right.
doesn't need a new reason. It's the old reason that it's moving on. In the
Right.
downturns from 2000, 2002, or 2007 through the early 2009, there were net gains, except for exception of one month, bad month in October 2008, where gold net advanced solidly, silver net advanced solidly, and continued up for years to go in 2011. Okay. Between 2000 and 2002, gold advanced in the early phase of its bull market. It was at $250 and it was going up while the stock market was going down. Okay. And remember, the NASDAQ 100 back then dropped 82% in 2 years, and gold went up. So you think a huge drop in the stock market should hurt gold? No, it didn't. Gold went up solidly on a percent basis during that time. So It means money flows from one place to another. It always does. It
Yeah,
never always evaporates. It goes, scared money moves. And already I think we're seeing that, like you mentioned, in the gold miners.
mhm.
Large investors are moving because they're getting more and more doubtful about the stock market enthusiasm. They look at their fundamental metrics, they're doubtful. So they start moving. Why? Because it's working. The gold miners are working. And I think you get more breakage in the stock market, you'll have more money flow as well.
There you have it. Silver could be on the cusp of a historic run to $100 or beyond, with gold already soaring. Micheal Oliver's analysis and the current economic reality shows that precious metals might be your best defense. With banking risks rising and job losses mounting, a precious metals strategy could be your best chance to not only grow your wealth, but most importantly to secure it. What do you think? Is silver heading to triple digits, or is this a bubble? Drop your honest opinion in the comments, share this with a gold bug. Subscribe for more insights, and I'll see you in the next video.